A group of traders from Essex, just outside London, who rode the crash to a $660 million profit.
Back at the peak of the pandemic in April 2020, global financial markets were collapsing, including the price of commodities like oil. While many investors in oil were losing money, a guy named Cuddles and 8 of his buddies were making profits of upwards of $660 million. In this video, I'm going to tell you who these traders are and how they managed to pull off the biggest trades of their career. Hey traders, this is Mike Sir here. I've been an active trader for over 21 years and a trader coach for the past 15 years. In my videos, I profile all the top traders in the world and teach you how to replicate their incredible success. I've been fortunate to train many successful traders, and in this video, I'm going to talk about a group of extremely successful oil traders who managed to profit handsomely during the collapse of oil prices in 2020. Now, global demand for oil had already been steadily dropping prior to the pandemic in 2020. One of the main reasons is the world's pivot away from fossil fuels that scientists say is necessary to fight climate change. With the focus of alternative green energy alternatives like solar or wind energy and the growing popularity of electric vehicles, this has led to oil consumption to trend downward. However, the sudden collapse in worldwide mobility as a result of lockdowns and travel restrictions during the pandemic was the final nail in the coffin. The COVID-19 pandemic triggered an unprecedented demand shock in the oil industry, leading to a historic market collapse in oil prices. Demand for oil cratered as governments around the world shuttered businesses, issued stay-at-home mandates, and restricted travel. Adding to the freefall in oil prices was the oil price war between Saudi Arabia and Russia that started on March 8, 2020, after the two countries failed to agree on oil production levels. The price war ended a month later on April 9th, when the Organization of the Petroleum Exporting Countries, known as OPEC, and its allies agreed to cut overall crude oil production by 9.6 million barrels per day. This was the single largest output cut in history. However, despite the OPEC agreement to reduce production levels, crude oil prices continued to fall, and on April 20th, oil prices for May delivery contract fell into negative territory for the first time in recorded history. The closing price of that contract on that day was minus $37 per barrel of oil. This was when, over the course of a few hours on that day, a group of 9 independent traders operating out of their homes in Essex, a county just outside of London, made over $660 million in a few hours. 3 of the traders were very young, between 22 and 31 years old, and each of the 9 traders made between $30 million to $100 million each. Here's a price chart of the WTI crude oil from 2018 to about 2020. So this was the crude oil that these Essex traders were trading. They were trading futures contracts, which I don't have that chart for because all those contracts have expired. But this will give you a good idea in terms of the price of oil and the price movement they were trading on that particular day. So we can see here that crude oil had reached a high here around $75 in October 2018, and ever since that time it's kind of been trending sideways, but trending a little bit lower. But the biggest thing that I want you to take a look at here was there was a major price support level around $50 here. You can see that every time it bounces off this $50 level, it kind of supports and goes back a bit. But due to the COVID pandemic, especially at the peak in early March, you can see here, or late February, early March, this was when oil prices really collapsed and global financial markets all around the world were dropping. And you can see that oil prices dropped from $50 all the way to about $20. Now it rebounded here, and on that day I mentioned April 20th here. I don't have the chart here that actually goes negative, but this was a time period where crude oil was trading about $18 per barrel, and actually on that particular day, or at the end of that day, that particular contract closed at minus $37 per barrel. So this was this particular day where it dropped so much in such a few hours, or on that particular day. That was the major reason why they made over $660 million. So let me explain this trading strategy that these oil traders executed to perfection. On April 20th, they saw that the oil price was around $18 per barrel and believed that it would go lower by the end of the oil trading session. So what they did was buy a large volume of oil futures contracts in the TAS market. Now TAS stands for Trading at Settlement. This meant that the traders would agree to purchase oil at whatever the price ended up at by 2:30 p.m. Eastern Standard Time, which was the time that the oil market closed for the day. Now these contracts gave the traders the right to purchase May 2020 WTI crude oil futures contract in April at a price that would be determined by the settlement price of the May 2020 contracts. So basically, whatever the price ended up at on that particular day when the expiration on April 20th, whatever that price was oil at that time, that gave them the right to buy oil at whatever that price was for oil to be delivered in May. At the same time, this incentivized these traders to short sell these oil contracts, and as oil prices kept falling, they kept adding to their short positions up till this settlement time. Now for the traders, it wasn't too hard to push down oil prices in an already weak market. With oil storage limited due to plunging demand and global lockdowns, many oil traders rushed to sell their contracts, with some paying to have others take it off their hands. This in eventuality pushed prices below zero for the first time in history. So what this meant is that anyone holding the May 2020 futures contract would be paid to take delivery of the physical oil in that contract. So in layman terms, basically, you get oil for free, and also someone paid you $37 per barrel for it. So by settlement time at 2:30 p.m. Eastern Standard Time on April 20th, the traders' massive short position on oil was closed out by their earlier purchase of the same oil futures contracts that were settled by the end of the trading day. So in simple terms, basically they were massively short oil, starting at about $18 per barrel, and they ended up closing their short position at minus $37. So this $55 per barrel contract difference was the reason why these 9 traders managed to make over $660 million in total profits. One of the lessons that you want to learn from these oil traders is to specialize in one sector. Now, many of you who know me or one of my students know that I preach not to be a handyman, but rather to be a specialist in the markets. You don't want to try to trade too many different markets, like trading stocks, commodities, cryptocurrency, forex. You literally can't capture all the opportunities in all those markets. And because if you don't focus, you won't really become an expert in those markets. So therefore, most likely you won't be able to capture big opportunities that come up in each of those respective markets. Another lesson that you want to learn from them is capitalize on fear. Now, when financial markets all around the world were falling and oil prices were collapsing, most people would be fearful, right? And they won't do anything or won't trade anything at all. Well, not these traders who sense an opportunity to make big money during these periods of time. They knew that with global financial markets falling due to COVID, that oil prices would crater and collapse. and that they actually continue to add to their short positions, betting on oil prices to fall even further. And the last lesson is to have balls of steel. These 9 traders were by far the biggest sellers of WTI crude oil in the entire oil market on that particular day on April 20th. And this basically shows you how much conviction or courage that they had to be involved in such a big trade position during one of the most volatile markets in history. And this is the main reason why they made so much money on that one single day. Thanks for watching. If you like this video, there are 3 things you can do. First is smash the like button for the YouTube algorithm, hit the subscribe button to watch more videos like this, and hit the notification button so you'll be notified of future videos where I profile the best traders. Second, if you're looking to learn how you can be the next top trader, please go to my website, mikesir.com, to download my free ebook, Become the Next Millionaire, where I profile a few of my millionaire students. Lastly, if you're looking for a mentor and want to learn directly from me, please go to mikesir.com to apply to work with me.